All right. Hey there. Good afternoon, everybody. Chris Franks with Texas West Capital coming at you live here on Tuesday, the 30th of May, 2023, from just north of Houston, Texas, Lake Conroe. Glad to have you all checking in. And I'm going to apologize here real quick. I have got the guys are working on the pool out back here, and I don't know how bad that's coming through. Hopefully, not too bad. You know, it just unfortunately was just nothing I could do about it. But I wanted to check in with y'all today and see how y'all are doing after we had that long not Labor Day, but Memorial Day weekend, right? So, man, oh man, hopefully you guys were long with some Bitcoin there. If you were with us in TWC, obviously, you know, we've been looking at long since the swing low there last Wednesday. And then, of course, it did its thing this weekend even more so. And so I even took a minute out of my weekend there to update you guys with that, with the alternate count, which we kind of hit that wave 3 target. So locally, but anyway, excuse me. So things looking pretty good right now for Bitcoin. Things not looking really terrible for anything else. Nvidia, it continued to pump up there over 400 now. I had somebody ask me, if that's the top. And I'll be honest with you guys, when you get a big move like that, when you get this, especially like this sudden move like that, I'm really cautious about trying to catch the top on that. I'm normally not out there trying to catch tops and bottoms anyway, like the uppermost or the lowermost price, but especially so when we get price action like we've had on Nvidia, because often what happens is people get excited and they jump in long, so the market basically ends up going long. And then people try to short it up there at the top, and they end up getting caught with that short, and so then price continues to rally higher because then those shorts end up having their, they end up getting, they have to cover on the shorts or they get liquidated or whatever. And so, it gives more fuel to the upward movement. So I'm going to tell you guys right now, if you're trying to short NVIDIA, without any confirmation of an actual reversal on it heading lower, I think you're likely to end up getting hurt more than anything else. So, you shouldn't be trying to do that with any of them anyway. You shouldn't be trying to catch it right as they reverse and all that. If you're not a consistently profitable trader, there's no reason you should be trading in any other direction than the trend. And so right now the trend is up. The trend has been up since November, right? I mean, it's been up, guys. We're talking 6 going on 7 months here. If you're still in denial, there's not a thing anybody can do about it. I'm not here to convince you. I'm just here to tell you the way it is. And you can sit there and you can argue with it all you want, but it doesn't change the nature of what's going on. And that's hard for some people to accept. They're going to sit here. You'll probably argue with me in a minute here. Hopefully not. But, this is what it is, guys. I talk all the time about the most important thing in trading is risk management, right? Number one thing, risk management. And it's not just risk management in your particular trade you're in, but what market you're in, what the structure looks like. I mean, there's all these reasons, things that are going on, all these other things that are part of that risk, right? But then beyond that, I say, okay, well, systems over individual trades all the time. So in other words, you should have a system in which case, that you have these rules that you follow for entering and stop losses and exits on trades and whatnot. But the third part of all that is actually knowing when to get in, guys. Listen, the first question you usually get when you talk about a system is always like, oh, well, what is the back testing? Well, I'm here to tell you guys, 30 years of doing this, right? Back testing is a very small part of it. You should be a discretionary trader. And what does that mean? That means that you should be, you have rules for your trading system, but then you have to understand when is the proper time to employ that system, right? Because just because the rules are met doesn't mean price is going to go in the direction you want it to go. Okay? And so you're going to end up wasting a lot of money getting into trades you shouldn't be in. I always say, don't be entering a trade just because there's a chance, but look for the higher confidence entries, right? Look for the higher confidence trade. Look for the ones that are more likely to play out. if you can do that, you're going to be a hell of a lot further ahead than what you're going to be. Now, nobody else out there is telling you this, guys. Nobody else out there is telling you this. What happens online? People say, hey, listen, learn my system and everything's going to be honky-dory great and whatnot. Here's the thing. Even if you're coachable, number one, right, and you do the work required to make that work, right, even if you do those two things, which are definitely required, you still may be employing a system in a market structure that you shouldn't be employing it in, right? So, at the end of the day, learning how to trade, guys, it's nothing you're going to do overnight. You're not going to become a millionaire overnight. Stop trying to do it. You're wasting a lot of money, okay, and a lot of time. By the way, speaking of time, there is a time tax on ignorance, okay? So we talk about this, and a lot of people are like, oh, no, I'm not going to pay anybody to teach me how to trade. I'm not going to buy a course. I'm not going to get a mentor. I can do it on my own. Well, most people can't. And we know that because 90-somewhat% of retail traders are out of the market in the first 90 days of getting in, and they've lost everything that they put in the market, and usually more. So we already know that most people are unable to do that on their own. Not because they're stupid or anything, but because they don't understand the requirement to do it, and they don't put forth the effort they have to do it, okay? But even if you're one of those very few who can do it on your own, there is a time tax on ignorance. I've talked to you guys so many times before. Whether it's me or somebody else, it doesn't matter. You got to find somebody that can help you get to where you want to go faster. It is worth the money spent. I do this every day. I've done it for decades now. Whenever I want to learn something new, I go in and I find somebody who knows how to do it really well, and I pay them. Everybody's like, oh, but this guy wants to charge me. Well, yeah, he wants to charge you. Why wouldn't he? Why wouldn't she? They've spent, in my case, almost 30 years doing this. I've lost how much money figuring out things to get where I'm at today. That's what you're paying for. You're paying for that knowledge and that ability to get where you want to get sooner. Now, you know what? If you still want to try and figure out your own, it is what it is, but understand that the odds are against you, okay? Doesn't mean you can't. But again, guys, I'm not here to blow smoke up your rear end. I'm here to be honest with you about trading. And if you want to be, I didn't get where I am on my own. I started on my own. And as you guys know my story, I lost a lot of money the first few years, right? And then I got serious about learning how to do it. And learning how to do it meant I was buying courses, I was getting mentors and coaches all along the way. Because I was serious. I wanted to do this to the point that what I'm doing it now, where it's given me this great life. So, there really is that kind of realization, that awakening that you have to get through, I think. Again, some people can do it on their own, but even if you can, it's going to take you a lot longer and cost you a lot more money than it would if you were trying, if you were taking courses or mentors or whatnot to help you get in there and understand the pitfalls along the way, okay? You're not going to get it doing it free online, guys. I'm going to tell you that right now, okay? So anyway, just some thoughts on it because I've had messages about it. I was on, what was it, Wolf Financial Twitter Spaces. What was it, yesterday? Sunday, something like that. And I got a lot of DMs after that about, some of those things I mentioned, which that was one of them. And it is what it is. And a lot of people argue like, oh yeah, no, I'm different. I'm going to do it. You just couldn't do it. Well, whatever you want to think, whatever makes you feel better. I'm not here to convince you guys. I'm here to give you the information, and then it's up to you to decide what you're going to do with that. Most people won't listen. It's the same way in anything else in life. Most people won't listen. Most people will continue to fight. But most people are also in situations in life that they don't want to be in. Right? So, again, you got to kind of put it up there. Let me kind of catch up with you guys. Who all's here already? We've got Martin. What's up, buddy? Bamboo, my friend, is here. Data as well. Diego, good to see you, man. Struggling to find time, but managed to attend again. Always great to see that. Fiboswani's here. By the way, guys, Fiboswani will be with us on Friday. We're going to use a different platform on Friday to stream, so hopefully we shouldn't have any issues. I appreciate you guys, dealing with it last time, unfortunately. Again, really still haven't been able to figure out what happened. He was on in the green room prior, and then when we went live, it knocked him off, and it wouldn't allow him to get back on. And then when it finally did, it was just a blank screen. So Not really sure what's going on with that, but we're going to try again with a different platform this Friday, okay? As always, guys, Fibble is going to, he's going to do his best to be with us every other Friday. So you can probably mark that on your calendars as well. Hey there, Brian. Good to see you. Andrew Bennett. Chief Webb, what's up? He said, I made it on time for once. Glad to have you here, man. Kimasabi says, what did you say here? Let me see if I can see here. I'm old, man, my eyes. Praying for that knowledge is way cheaper in the long run. Paying for that knowledge. Okay, yeah. Education like that pays for itself within a year if learned properly. Yeah, it is what it is, guys. Again, people tend to think that trading is something different than anything else you want to learn in life. They think, okay, because I can jump in here and do it, I don't have to get anybody to help me. I don't have to really learn anything, right? I can do it right away. But again, if that was the case, everybody would be doing it, right? And doing it profitably. We wouldn't have a 90+% attrition rate, in the first 3 months of somebody first getting into the markets, right? Think about yourselves, guys. Be honest with yourself. How much money, how net negative are you since you've started trading? Most people, and some people are really stubborn. A lot of people are really stubborn, and they get in and they continue to remain net negative, right? They're losing more than they're making. They might get every once in a while they'll be like, man, I'm just about ready to quit, blah blah blah, and then they'll hit something good and they'll have a good trade. They'll be like, oh yeah, I'm back, and then over time it's dealing them out again. It's tough. It's tough. The hardest thing, guys, I keep telling you, trading is simple, right? It really is. It's not like this really complex thing. It really is simple. But it's also not easy. And it's not easy mostly because you have to deal with yourself. You have to deal with your ego. You have to deal with your lack of knowledge. You have to deal with your emotions. These are very, very difficult things, especially the ego and the emotions to deal with, guys. Really is. So hopefully I'm saying something that at least, gets through to you guys. Would we love to have you with us? Sure. I think what we do is amazing. I don't think there's a better place really to learn, honestly, especially if what you're interested in not only is the short-term trading, but really the forecasting. How can you put, $100 in Bitcoin today, or back there in November where we were talking about, right? When I said, listen, this looks like the bottom here, we're going here. This is the structure and everything. How do you put it in there? How do you know to put it in there and then to keep it in there as price continues to rally, right? So many people missed out on that. So many people are missing out today because now all of a sudden, it was 20,000 and then it was 25,000 and now it's 30 or 32,000. And then after that, it's going to be 40,000. They're going to keep moving the goalposts because they're very emotional. They feel like price has to go down. Now, a lot of times when you do this, you feel like price has got to go down because you're sitting there and you're trying to make sense of all the macro stuff that's going on, right? That's not the way to do it, guys. One of the best things you can do as a trader is to ignore the macro stuff, ignore what people are saying online and what they think that means, and just look at the dang charts. I know how to do the macro stuff. I choose not to do it solely on its own because I know the pitfalls. But I can back into my macro ideas based on the chart. And as you guys have seen, if you've been following me for a year or more, you've seen pretty accurate, pretty scarily accurate, right? You can do that too. You really can. This is why I teach trading by charts rather than trading fundamentals, guys. Because charts, anybody can learn to trade the charts if they're willing and able to be coachable, which means leaving your ego at the door, accepting that you don't know what's maybe going on, and then two, actually putting forth the effort that is really required consistently. Focus, discipline, consistency, guys. That's what's required, okay? Let me see here. Sorry, guys, I'm on this thing this morning because I just had, a lot of DMs over the weekend, especially when I was on the show over there. Last minute, they just said, hey, you want to join? I was like, last minute, okay, yeah. We're just hanging out on the lake, right? And but I've had a lot of questions about that for people who don't understand, or people who are still very their ego is leading the way, or their emotions, right? And I can't do anything about that. Nobody can do anything about that except for you. You have to, accept. You have to be open enough to accept what I'm saying and be honest with yourself. Be truthful with yourself. A lot of the difficulty we have in trading, guys, or learning any kind of skill really is our ego. It's letting go of this, oh, I know what I'm doing, especially if you're generally pretty intelligent. You don't need to be intelligent to trade, guys. You don't need, like Warren Buffett says, it's not one of those things. Trading, investing isn't one of those things where you need 160 IQ. You don't. Oh, but Chris, but you got all this education. That's why you do well. No, I got the education for me. That's my thing. That has nothing to do with or very little to do with my trading, okay? You don't have to have the kind of education that I do. I have friends, guys. I have friends. I've got one who didn't even graduate high school. Didn't even graduate high school, okay? Still to this day. And the living they're making is absolutely just stupid. You guys would be like, oh my God, I want that life. But you don't have to have that, that real high education to be able to do this successfully, okay? So there's a lot of misgivings when it comes to trading. And hopefully I'm opening your mind up to the idea that trading, has to be approached a certain way. But you can do it if you choose to. It's all on you. At the end of the day, it's all on you. Okay. John Cross says, agree, invest in yourself and make sense the whole time and get what you pay for. That's right. Get what you pay for. What's up, Hank? Good to see you. Soren, what's up, man? Tenacious B checking in. Man, I still love that name because I'm a big fan of Tenacious D, which I'm sure that's why you did that, right? Jack Black. John Cross. What'd you say there, man? Appreciate all the honesty you tell. Yeah, I mean, that's what it is, guys. A lot of people are going to be turned off by this. I know that already. Okay, a lot of y'all are going to be just really turned off by all this because it's not the world that you envisioned in your head of what trading was when you got into it. But a lot of that, many of y'all have been in for a while, and you're recognizing how much you're losing, and you're hating that. But you're being steadfast and refusing to acknowledge that as long as you continue doing the same things, you're going to get the same results. It just has to be that easy, right? In your head, it just has to be that easy. I'm doing something stupid. It's on me. But it's not that I can't do this, but at the same time, it's also like, well, I'm not going to change what I'm doing, right? So, hopefully that makes sense, guys. By the way, you can join us here. Obviously, this is about to end though soon, guys. Tomorrow, so you've got right now until tomorrow. You can get in. The last big discount we're going to do on our Elite, our Tier 3 membership, you'll be able to get that for $549 rather than $1,500 and whatever dollars it is normally. You're going to save just over $1,000 on that. Get a year. And so what does that equate to? That equates to about, $45 a month the next year. And at that point, you're going to know more about what you need to know about trading as far as the realities of it. You're not going to get half-truths or outright lies. You're going to get in there and you're going to understand that. You're going to be on your way to forecasting, again, using Elliott Wave and Wyckoff and then price action concepts, live streams every week, all that stuff. We do all that, whole bunch of other stuff. But you can join us there at texaswest.capital, all right? Or if you just want, you can get up to 3 months of that Elite membership there for only $50 a month. Normally, it's about $199 a month. So you can cancel at any time from right in your membership portal. You don't even have to talk to me. I know a lot of people, they're like, oh, my God, if I have to cancel, I have to contact somebody, and then they're going to try and sell me to keep me in. No, we're not. Guys, listen, I don't do that. You can ask. I've been doing this for almost 6 years. I have never jumped on somebody and said, hey, listen, man, you need to stay. What can we do to make you stay? No, not ever. I respect you. You decide how long you want to be in. That's up to you. We're going to be here for you, right? So we make it easy for you. Like I said, you go right into your membership portal there and just hit cancel anytime you want. 1 month, 2 months, 3 months. On your 4th month renewal, or on your 3rd renewal, right? So your 4th month, it'll revert to the regular pricing. But, you can stay on then, or you can cancel before then, whatever you guys want to do. The first 3 months, you can get it $50 a month, though, okay? Anyway, so if anything, that right there will give you clarity, at least to get you going properly as trading. If you are struggling right now to be consistent as a trader, you should be with us, period, end of sentence. I am not even going to sugarcoat that, guys. Okay? But you have to do the work. I can't do it for you. All I can do is what I do here and much more online, at Discord there, which is help you understand how and why things do, move the way they do. How to read the charts, but you've got to put that work in it, okay? Um, so anyway, there we go with that. Let's go ahead and jump on some charts here, guys. Let's see what we got. Let's go over here. So I've got a few charts here, right? So these are some charts that I have put up there. All right. Now these are charts that I have put up over the last probably month or two there on Twitter, and just some different ways of looking at this, right? So we've got this one, and so this one gives us these bear market to bull market stages, these 5 steps that kind of happen here, right? Now the biggest one is this step 4 is this kind of green area here. This is basically the 61.8 retracement. So, if you were to draw a retracement here, use your retracement tool, excuse me, up there, that's usually at that 50 to 61.8% area, right? And that comes at the right around the highs of the Ichimoku cloud. This is, by the way, guys, this is the weekly, okay, on the BLX here. So you've had it back over here in 2015. You have it over here 2019. And if we do it again, that's going to give us a target up here into that 45 to 52,000 kind of area. All right. So, I mean, again, that's what we're kind of looking for still here. There's no reason to think anything else at this time, right? Let me see here. What else do we have here? We have basically what it is, you print the swing low, you cross above the 20 MA, okay, which is step number 2. And then you're going to wait until the 20A confirms the support, the 20 MA. And so that's either going to be a retest or a pull where it pulls away, okay? And then you get a rally to the 61.8% of the bear market, which is this area up here, which completes, again, around the Ichi Cloud's highest point. And then you get a pullback for the 5th, and you look for that next rally up, right? Now, a lot of people are looking here, and they're going, oh, my God, we have to do this. And they think, oh, we have to have these range lows tested because you did it here. Yet it's never done it anywhere else. You see how this doesn't make any sense, guys? Like, we've been doing this multiple cycles here. We've never, until this point here, actually neared retesting those lows, okay? Once we've been up there to that wave 4, to that 4th point there. Again, this right here, if you guys were around during this time, right? This was the COVID low over here, March of 2020, and it was done with the BitMEX order engine had the issue, remember, and it kept selling off there because people were over leveraged and getting liquidated and whatnot. And so I kept remember they turned it off down here, and that's why all of a sudden you got the rally back up. But if you're thinking right here that we have to test the low and your reasoning is this right here, you're not doing it right, guys, okay? You're not doing it right. Let me see here. Sarang, what's up? It says, is the BLX on TradingView showing volume across all exchanges, or is that other symbol that has it? Yeah, no, you can get the volume on the BLX. But again, it's not just the total volume, it's that whole weighted volume because the price itself is weighted, right? It's an index. So, Coinbase gets a certain amount of weight. Bitfinex gets a certain amount of weight in this overall pricing thing here. Yeah. So, but your volume's the same way, okay? But I wouldn't worry about it too much. Volume is volume, whether it's wash trading or not. If it's buying and selling, it's volume, right? And so, people are going to argue that, because of that, we can't really get a truthful thing about it. But yet, if you're using Wyckoff, the things still happen the way you expect them to happen, right? Because it's actual buying and selling that's going on. But, it's just one of those things we have to, that we deal with, right? Let me see here. What else have I shown you guys? I showed you this one right here as well. And so, again, right here, again, we're right here. This is the weekly pivot. These blue lines are the halvings, okay? This blue line is the projected halving here in April of next year. And so, again, looking for some moving up, right? Now, what generally happens? Well, generally, you get the test of this pivot here as support. So see what happens? We come off the low, right? And then we pull back and we test a weekly pivot as support. And then we rally up into this pivot up near the highs, right? Right here, same thing. We rallied up here, we tested the pivot, rallied up to the pivot near the highs, and then we pulled back, right? So here we've come down, we've retested the pivot here, and so we should be looking up toward this pivot up here around the highs. Again, that gets you almost at that 50,000 area. And so this is just something that we continue to do here. Other than, there's always this outlier back here in 2011, 2012. Why? Because again, guys, this was the very beginning of the cycle. The market itself was very illiquid, right? Once you start getting up here into around 2015 or so, people start getting a little bit more serious about the market. So it starts giving us more liquidity, and things start happening the same way after that. But, you got a 50% pullback here in 2012 instead of 61.8. And then, you got rejected and pulled back and then a breakout higher. But, much shorter period here than what you had here and whatnot. Again, because of just what it is, right? So this is kind of what we're looking at, and we're still kind of doing things the same way, right? Again, usually we have this rally up to the 61.8, prior to the halving, right? This one right here came right before the halving. So, I mean, we could do something like that where we just kind of continue up over here into halving. That would drive, I think, honestly, guys, I think if we continue to just kind of rally up here, I think this one would be the toughest for retail. If we just kind of kept on meandering up like we did here in 2015 or so, up into, just less, I guess, what is that, about 10 months from now or so, 11 months from now? Because every time it continues, there's no definitive movement up. So people are scared to jump in, right? And they're always waiting for the pullback that never comes. And then they'll probably jump in right around there. And then, of course, it'll pull back and they'll get caught and then it'll go up without them. Now, the other thought is, okay, we can get this strong rally up here, which is what I think is maybe more likely to happen, a stronger impulsive rally up. And you might have a few people trying to jump in on that a little bit, but they're going to get scared because everybody's been telling them that it has to go down, right? Now, I'm not telling you it can't go down, but I'm also not telling you it has to go down, right? It doesn't have to go up. But right now, if you pay attention to everything I'm talking about, everything I continue to talk about, practically everything says it's going to continue higher. So until that changes, why would we continue to look lower, right? Does that make sense, guys? Again, people try to make trading much more difficult because they look at what's going on in the macro and they say, oh my God, if this happens, then I think this will happen, right? So you've got 2 points that you can screw this up, right? The first one is if it happens. It may not happen. Whatever you think you're looking at may not happen, right? But if it does, your first part's done, right? But then you go, okay, now if it does, then this may happen, right? Your second thing. Again, the problem with that is you don't know if that thing is going to happen, if even your first thing happened. You see what I'm saying? So you're basing longer and longer thoughts on more and more variables. And with anything in life, guys, the more variables you have, the more likely you are to be incorrect. Trading does not need to be difficult. We tend to make it difficult because of things like that, where we're trying to figure out what could happen based on our limited knowledge of what normally happens in these other things, right? But the thing is, even what normally happens doesn't mean it has to continue happening, right? Does this make sense at all, guys? If you're confused, you should be. But that's what's going on in your head. That's why you have trouble buying down here, right? That's why you have trouble understanding, even as we pointed out, how this is all, accumulation in here and how it's all setting up. And what's going on here is what we look for, this sideways holding above the range, all this kind of stuff. And you have trouble accepting that. You want to argue with it because, oh my God, the debt ceiling, right? So you had the debt ceiling go, they agreed, right? So later today, I think around 3 p.m. or so, probably 3 p.m. Eastern, I think that, the House of Representatives Rules Committee is going to meet, okay? And they're going to meet there to consider the bill, right? So the bill is 99 pages. So they're going to meet. So they have to consider that and go through that first before the House and the Senate can actually vote on it, okay? So just because the president and, what's his face there from Republicans, just because they agreed on it themselves doesn't mean that their party is going to vote for it, okay? So this is all a lot of stuff still hanging out there. But the charts say what the charts say. You see what I'm saying? You don't have to worry about what if and oh my God, are they going to do it and whatever, because the charts are telling you what's going to happen. And guys, guess what? Let me get this next one here. Guess what's been happening? The weekly pivot here, right? This weekly pivot continues to hold as support. We broke out back on March 13th, and we broke out on large candle spread, large spike of volume. That's what you look for when you're going through real resistance, right? Tested. We continues to hold this support. We have this purple resistance line right here, right? Going up through here, which is just tested as, that's where the wicks are hitting, okay? We have, if you're into MAs, we have the 20 MA on the weekly broke out above the 50 MA. It's just about to try to break out above the 200 MA. The 100 MA is starting to flatten out. So your trend is clearly up. You can argue all you want about it, but the trend continues to be up, right? And again, I don't do this to convince you. I do this because hopefully it'll come through in your head. You go, okay, well, yeah, until something different happens, I should be, going with the direction of the trend, right? When is the vote expected? Well, we'll have to wait and see what the House of Representatives Rules Committee says. So yeah, it's got to go there first, and then it'll go through the House and the Senate. We'll see. Now Biden and what's his face over, I can't remember his name, with Republicans, both believe they're going to get enough votes to pass this. In the grand scheme of things, guys, listen, I've talked about this so many times before. At the end of the day, I come from the libertarian background, so I understand, Mises and all this kind of stuff and the idea of austerity and whatnot. But the reality of it is we are a debt-based economy, a debt-based government, right? McCarthy, yes, thank you. Debt-based economy. And what that means is you have to continue to be able to create debt. That's how it works. A debt-based economy needs inflation, right? You have to have inflation, and the government needs to be able to continue to create debt. That's how you grow, right? Now, that doesn't mean you need 10% inflation or anything like that, but you have to have inflation because the inflation makes it cheaper to pay your debt. If you get to the point where you have deflation, right, maybe austerity or something, and you get deflation, well, all of a sudden your debt becomes much more expensive to pay. So if you're in a debt-based economy, you have to have inflation, and your government needs to continue spending, creating debt. That's how it works, guys, okay? And I'm not saying that I like it. I'm saying that's the way it is. See, there's a difference, guys, okay? Yeah, smash the like Frank says. What's up, man? Good to see you. But that's the thing, guys, right? We spend a lot of time in here talking about what we want or what we think things should be. It's the same when we're trading, right? Well, this is what the chart should do. This is what we want the chart to do. But you're not letting the chart do what it's going to do. You're arguing with it, you're fighting with it, right? It's the same thing when we're talking about, government and everything's going on. It is what it is. Governments are a certain way. And as long as they are there, they're going to continue to be that certain way. So whether you like it or not, that's what's going to happen. So what do you do? Well, you recognize that and you figure out, how do I make money? How do I make money? That should always be your goal, guys. Everybody's like, oh, well, money doesn't buy happiness. No, but what we find from the studies that they've done is it makes people a lot more likely to find some sort of happiness, right? And why does it do that? It does that because it makes the other things, it gives us the ability to do those other things. Healthcare, the better healthcare, better education, better lifestyle. There's these things that it does for you. And again, some people are going to continue to argue because they're not actually listening to what I'm saying here. But a lot of people give up on Bitcoin because they think, oh, it's too difficult. I don't want to put in the effort to make the money. That's what people do, right? I don't want to put in the effort. I just want to sit here and I want to live my life scrolling through Facebook and Twitter and TikTok videos. I don't want to have to try in life. I want to go in and put forth the least amount of effort. And for many people, if you're honest with yourself, that means you go to work and you goof off at work. We know that people play online at work. They screw around on work. Some business is paying you to do a job in which you spend half the day goofing off online. But see, again, a lot of people are going to get upset about this. A lot of people are going to feel offended by this, going to feel like I'm attacking them. Good. Because until you recognize and take honest ownership of what you're actually doing, you're not going to get anywhere else in life. You are not going to get anywhere else in life, guys. It will not happen for you. Life happens, but the things you want will not happen for you. You have to make them happen. Stop sitting around expecting somebody else to do it for you. You have the opportunity, especially as a trader or wanting to be a trader here, where you can affect significant positive change in your life. But it's not going to happen on its own. You have to make the conscious decisions and take the actions consistently that are required to do so. You have to focus. People get distracted all the time. And then they go, oh, well, I couldn't do whatever. And they blame something else. The reality is they just lost focus. They didn't have goals. They did not physically write down goals. I keep telling you guys, the way you are in life is exactly how you're going to be as a trader. You cannot be different. If you're lazy, if you don't set goals, if you don't, try to affect positive change in your life, in every other area of your life, you're not going to do it in trading, guys. You're not going to do it in trading. Again, this is something that most people are not going to tell you because they don't know. They don't understand. But if you're listening right now, you have the opportunity right now, just by listening, truly listening and hearing what I'm saying, to actually start today to change your life, okay? Whether it's with trading or anything else. These things I talk about, they're applicable in all other areas of your life. They really, truly are, okay? Michael Johnson, what'd you say there, man, about money? Money buys options to find happiness. Yeah, you know what? It's a lot easier to be less stressed out about your health if you've got good health care, right? It's a lot easier to be less stressed out about where you're living if you're living in a nice area, right? Listen, guys, I live in a guarded community, all right? We don't just have a gate, we have guards, right? We have security force, everything over here, right? I get to live a better life because I don't have to worry that when my son goes out the door, he's going to get shot or kidnapped. I still worry about it. I'm a parent. What can I say? But you see what I'm saying? Money affords, as Michael said there, money affords you options. Options to make life for yourself and your family better. Okay? So if that interests you, if that's the kind of thing you're like, yeah, that's what I'm looking for, then you have to do the things that are required to get there. It's not just going to happen for you. You have to make it happen. Okay? You do. I can't say it enough. I can't do it for you. Hank can't do it for you. Fibbo can't do it for you. All we can do is we can tell you these realities of life and of trading, but you have to actually go forth and put that effort out there consistently. You need the focus. You need the discipline. Okay? Not just in trading, but in life, whatever job you're doing, whatever position you're at your job. You need that stuff to excel, to do better, to find other opportunities where you can go and make more, right? Have better healthcare maybe with the job, right? You have to do that. So Hank believes purpose is more relevant than money. Again, purpose is not going to buy you healthcare. It's not going to buy you better healthcare. It's not going to buy you better education for your kids. It's not going to buy you a safer place to live. Guys, I'm going to tell you right now, a lot of people are going to put this nonsense out there, and I used to say it myself. Do what you love, right? BS. Do what you're good at. Use that to make money, and then get to the point where you can do what you love. Most people who do what they love, they don't get very far with it. And you can have purpose for whatever you're doing and be all excited about that. But when you've got your bill collectors knocking on your door, when you got to worry about your kids walking out of the house, when you got to worry about the value of the property that you bought, right, degrading. When you have to worry about all that, your purpose, it doesn't keep you very happy for too long. That's the truth, guys. That's the honesty right there. Okay? So, yeah. Freedom to do what you want, Bryce says. That's right. Freedom. That's what freedom is, right? So I believe trading should give you two things, right? I've said this before. It should give you, one, time, right? Once you're doing trading correctly and figured it out, right, it should give you time, freedom there, because you can't get any more time, right? There's only so many hours in a day, right? And then money. Money gives you freedom of movement, freedom of options, freedom of choices, right? Those are the two things that trading should do for you. I'm a firm believer in that. Again, you can argue all you want. I'm not going to argue about it. I'm telling you right now, somebody's been doing this for 3 decades. That's what you should be getting out of trading, because those two things give you the ability to do everything else. They allow you to follow whatever purpose you may believe that you have. They allow you to make sure that your kids have the best start in life, right? They make sure that you and your spouse and your family, that you've got time to spend with them, that they're taken care of, right? This is what we really want, right? Think about it, guys. We don't trade to make money. Why do we trade to make money? We trade to make money to get time, freedom, right? That's what we're doing. The end goal is not dollars or pesos or whatever you're trading it for, right? Euros, whatever it is, right? Be honest with yourself. That's what we get, but we want that because it gets us the other thing. It gets us the freedom. That's what we want. If we could do it without money, we wouldn't worry about it, right? But we know that money gets us those things. That's why we do it. That's why it's done, right? Money is not the first thing people want in life. Maybe in Texas. Okay, so I guess you missed what I just said, Hank. I said, yes, we want money. Yes, we do. But we want money because it gets us what we really want, which is freedom, which is time, which is options, which is safety, which is better health care. That's why we want money. We don't want money just to dive into it like Scrooge McDuck, right? Can somebody cue in the Scrooge McDuck video now? You know, where he dives into his money, swims through his money bin or whatever. That isn't why we want money. We want money because what that does for us. Because of the better life it affords us. Less worry about things, better protection, better quality life. That's why. Well, okay, Hank. Again, you're going to sit here and argue it is your thing. Argue all you want. I'm telling you guys right now, that's what it is. It has nothing to do with being American. It has to do with what do you want out of life. Can you do it without money? No, you can't. Because everything in life costs money. And the better something is, the more money it costs. The more safety you want, the more money it's going to cost. The better healthcare you want, the more money it's going to cost. It's just what it is, guys. If you can't see that, you're not doing a very good job of looking at things honestly. Right? 3-Day Death Cross, what's up, man? Good to see you there. Let me see here. Let me kind of catch up with you guys here with the charts, okay? Let's see here. Let's see, what else we got here? Oh, real quick. So there is this gap here. This was the Bitcoin futures chart I showed before. We got the gap up through resistance. It's through resistance here, right? And it's through resistance on this descending wedge, right? So this gap through resistance is a breakaway gap. Okay, guys? Most often, it's not filled right away. Now, if we break down into the gap, there's a good chance we could fill it on down here toward 26.8, 26.9. But as long as we stay up here, the odds are we'll continue up higher. Okay? So that's what we're looking at right now. And as you can see, that's kind of what happened here, right? It pulled back to its previous area of resistance. We rallied up, we pulled back right about that same area. Catching a bit again. So just because there's a gap does not mean it has to fall through. Again, this is actually a breakaway gap. So it could head up further, fill up this gap up here, for instance, from May 7th. All right? This one up here. And it may not ever fill this back in, or it may take a while to fill it back in. But just because there's this gap here, it is a specific type of gap. It is a breakaway gap. And most often that leads to higher. So I want to continue looking higher there, all right? Unless, of course, like I said, we get this breakdown into the gap, in which case then we'll probably see the pullback down toward that 26.8, 26.9 area, okay? Let me see here. Michael, what's up, man? He says, I know we had sent some messages back and forth on Twitter about the weekly RSI. Why does your RSI not seem to show a hidden bull dip, but mine does? Probably the charts. This one right here, for instance, well, this is the 4-hour, of course, but this is, Bitcoin futures chart. Usually I'm looking at the weekly. I'm usually looking at the BLX chart. So yeah, that's probably what it is. But even the exchanges, even the difference in exchange, I think we found out that I was looking at you were looking at the Coinbase chart, and I was looking at, I don't even remember, maybe it was the BLX, maybe it was the Binance chart. But yeah, even within exchanges, depending on how the price action plays out is how that RSI prints, right? Because the RSI formula, right, is based on, the previous candle closes, right? So if you have more movement or less movement, your RSI is gonna be different, right? So that's why I look at it, okay? Christopher H says that Scrooge McDuck was your childhood idol. That's awesome. Yeah. So, Chef Webb, I think I said Chief Webb earlier, but Chef Webb says, actually, I do want money so I can dive into it. Yeah, maybe you want to do that once or twice, maybe. Oh, that's nasty to me. All the people that touch it. Oh yeah, all the cocaine residue and whatnot that's all over it. Oh no, I'm good with that. I don't want to be in all that as it is. But anyway, so I mean, again, no matter how we're looking at this, we're kind of looking for this higher up, right? And so breaking out higher here, what I want to see a breakout above this swing high here. On the futures, it's 29,435, and then the swing high here, which is 31,200. Those are my next two steps as we rally up. If we can get to the second one again, we're heading up there. Looks like we're heading up there toward that 40,000 kind of area. Okay. Who uses physical money? Fiboswani wants to know. I do. I carry it with me. You never know when the cards aren't going to work. I've been to restaurants or stores before, and their ATM machine, or not their ATM, but their card reader is down for whatever reason. I'm like, are you kidding me? Got to pay cash. Yeah, I always carry cash. So anyway, but those are the two levels, guys. That's where I'm looking. If we can break out of that first one, the second one becomes it. If we break out above that again, we're still looking up there toward that 40,000 and higher area. Okay. So and so if you're on the let me see here. This is a BLX over here. Bitcoin USD on Bitstamp here. That would be the initial target would be this one right here at 29,851 area, and then the swing high up again around $31,035 here on Bitstamp. So, but those areas right there, those swing areas, that's where I'm looking, guys. As long as we continue up there, right? Let me see here. What else do we got going on here? Some favorite restaurants in your area are cash only. Tenacious B says, yeah. Hank says he hasn't used cash in years. Fiboswani says he hasn't used physical money in months. Arrow Quinn says he loves using cash. What's going on, Sylvia? I see you there. It's easier to pay with cards and everything. Sure. But I've been in enough situations where you get there and all of a sudden the reader isn't working or whatever. And it's like, it's just such a pain. So I always make sure I got some cash on me. It's the way it is, right? Christopher likes strippers, he says. He says they don't take credit cards. I wouldn't know. I don't go to strippers, but good to know if you do. I'll just give you a hard time there, Christopher. So, yeah. Anyway, let me kind of catch up here, guys. Let's look real quick here. We've got the E-minis right here, right? So we had the breakout above the level we were looking for. It pulled back into the high volume node, as you can see here on the 12-hour chart. Broke out another higher. Now we're pulling back once more. Let me see here. Here's actually what we're looking at right now. And so, basically you just want to kind of see this yellow area continue to hold this high volume node. Right now, you've got the daily pivot sitting right above it. But remember, guys, the daily pivots on your charts, if you're using pivots, are going to change here in 2 days, right? On the 1st. So make sure you're ready for that. These will change. This one isn't going to change a whole lot, I don't believe, because we've got a lot of sideways here for more than a month. So it's probably just going to maybe dip down a little bit more on that. But I've got a wave circle 3 target up here at 48.71 and 25 cents so far. Still looking for the breakout above the mid-August swing high at 43.2750. That'll add confidence to this count. But again, remember, guys, if this is 3 and this is 4 on the pullback here, 4 could be done at the bottom, or it could print a flat, which will get us up near the all-time high and then back down toward the low. Or it could be a triangle that plays out. You get A, B, C, D, E. And something like that triangle could, for the rest of the year, kind of continue on, right? I see a lot of people talking about the NASDAQ and how it's rallied up and how tech stocks are looking good and how that's dangerous. How that means that it's a low breath rally kind of thing, right? But again, guys, you have to look at it. What were the biggest sectors that dropped last year, right? It really was tech, right? Sectors like oil and whatnot did really well, right? This year, again, you like Hank likes to say, everything's straight up or straight down, in a straight line, right? It doesn't go up or down on a line. And so when you're looking at this, you go, oh, well, it's not good because only the tech, mostly it's just the few, the tech stocks that are actually rallying. But you have to look at last year where they did the worst, right? They were some of the worst out there. And again, you look at some of these energy plays like oil and whatnot, and last year where they did really well for quite a bit, right? They're not doing so well this year. So it's just this rotation, right? It's a rotation. Now, do we want to see the breadth, which is the number of stocks making new higher highs, new 52-week highs? We want to see that happening, yeah. We want to see that increasing. But just because right now it's just kind of tech stocks doesn't mean that it has to be necessarily bearish, right? Because, again, they're just filtering out from last year. So we'll see what happens with it. Again, I'm still looking for that breakout above this mid-August swing high. And then we've got that wave 3 target, and we'll kind of see, is wave 4 done? Is it printing a flat, or is it going to print a triangle? Okay? Stop worrying about all the what everybody's telling you about all the, the macro stuff and whatever. It may or may not happen. And even if it does happen, whatever they say, right? If that first step does happen, it doesn't mean that the result is going to be what they expect the result to be. Stop listening to other people online telling you, stop listening to the macro stuff, and then stop listening to people online telling you what it means. Okay? Even me. Don't do it. Look at the charts, guys. Trade the charts. You get scared, you get locked out on the charts when you're unsure about all that macro stuff, when you start thinking about, oh, well, but this is going to happen or this may happen. It hasn't happened. The charts aren't showing you that it's necessarily going to happen. So you have to trade your charts, guys, okay? Let me see here. What else do we got? We got TNX here, which is the, again, if you look here, it is the CBOE 10-year Treasury note yields, okay? So this is the one where we had that big breakout here. This one right here. Okay. And so, again, we're kind of on that. Now, a couple of possible ways this could go. You could look at this maybe like an AB, and then 1, 2, 3, maybe a 4, and we get a 5. Or you could look at this maybe like a 1, 2, 3, 4, and then 1, 2, 3, 4, 5. You could be done there, right? Or, again, this is the monthly. We might have missed a little one in there. It could even be done as an ABC here as well, right? Or even A, B, C is W, and then X. And then 1, 2, 3, 4, 5, A, B, and you still get a C coming up here, okay? So there's the possibility that the yields could continue to go higher here. The monthly is just now setting down into oversold, but again, on the Stochastic RSI. But remember, these things can last for a long time, because it is such a large time frame, all right? You can stay Again, you were oversold here. Look at this right here. From back around December of 18, January of 19, until March of 20, right? So for a year, you stayed oversold other than this little small pop out and pullback, right? And you stayed overbought for quite a while other than that little bit here. So you could stay for a while. So we're going to wait and see. If we lose this weekly, monthly pivot right here at around 3.25, if we lose that, then things start looking like, okay, there's a hinting that maybe this top may be in. If we look at the weekly, you can see that the weekly is getting to overbought, not quite there yet. But the pullback has only got us about midway, just to the bearish side of neutral here, right? We're in a downtrend still. We still have a high, a low, lower high, lower low, potentially lower high on that RSI. We do have a bit of a bull flag, it looks like, going on here. So we want to be careful and watch what's going on, okay? But again, if we lose this support down here, especially if we don't break out of this bull flag, we just break to the downside through this, there's a good chance that top may be in on the 10-year yields there, okay? DXY. So again, we were talking about if we broke out further, we were looking for this kind of range on the larger time frame. This is that kind of weekly time frame rejection range here from 104.27 to 105.84 area. As you can see, we've hit that. We did get bearish divergence here. So you had lower highs here on the RSI. You had higher highs here on price. We had this big bearish engulfing candle on the drop there through this red support. We did find support right now, though, on this pivot here. This is the hourly pivot, and we've bounced back up. Now, we still aren't oversold with Stochk RSI, so I would be looking for it to continue lower. As for the daily, again, just now crossing bearishly and overbought after topping out. On Stochk RSI, we stopped just short of the swing, just sort of overbought up there. And so, again, you have the lower highs here. And well, that's not really good. It doesn't line up really well. But nonetheless, getting this big move. But it's just range bound right here, guys, between that hourly pivot and then this initial kind of the 70.5 retracement area, this initial kind of target up there. So for now, still looking at this as a 1, 2 here. So A, B, C is a large flat. If we do break out above this swing high at 105.87, then we could potentially be looking up here around 109. But then it still would be looking at this as like a 1, and then maybe a flat here. So you get an A, a flat here is a B, and then a C up there. So that's kind of what I'm looking at, all right? Let me see here. Let me kind of catch you. Dime, what's going on? He says, I live in Thailand. Taxis definitely like the baht in the USD. Yeah. This is what we find out. If you travel extensively, most countries are people that are providing services especially are looking for U.S. dollars. Even today still. So, again, I know there's this narrative about de-dollarization and all this right now. Guys, I think we're still quite a while off from all that, okay? But again, don't listen to all that. It could be working out, but it's going to take time. It's nothing that's going to happen overnight. Everybody wants to go, look at Weimar and all these things. That's a very glossed over look at hyperinflation, right? There's a lot of things people miss there. I've done threads on it in the past. A couple years ago, I think I did it. But anyway, and of course, you got to look at things like world reserve currency, stuff like that as well. As long as the world still has 60-somewhat% of debt is U.S. based, I don't see any reason why the USD would go out of favor. You've got to get the debt down, because that debt that's denominated in U.S. dollars has to be paid in U.S. dollars. Everybody says, the Fed's creating money out of thin air. There's nothing backing it. Sure, there's stuff backing it. U.S. taxes have to be paid in U.S. dollars. There is a use case. It is required. And then again, U.S. debt, if you're buying debt from the U.S. government, you have to pay it back in U.S. dollars. It is a requirement. Now, I know you guys go through, you're just this dollar apologist or whatever, or dollar bull or whatever. No, I'm just saying this is the reality. And this is the problem. If you guys get so hung up online, you're not going to recognize the realities of it. I'm not saying it's great or fantastic or that it's going to continue forever. Matter of fact, all fiat currencies have always ended, okay? But I'm just saying the reality situation is this is the kind of economy that basically the world is in, most of the world, right? And well over half of the world's debt is U.S. debt, which means it has to be paid in U.S. dollars. So, I mean, the idea that the dollar's just going to roll over tomorrow or whatever, it doesn't make any sense, guys, okay? That doesn't mean Bitcoin can't still do well. That doesn't mean you can't still do well with Bitcoin. But you have to be honest about what's going on. Otherwise, you get caught up in the narratives that everybody kind of gives you where they're not really thinking much or they're trying to sell you something on it. And then you're like, well, why the hell am I losing money now? Right? Let me see here. Let me kind of catch up with you guys. Let me see here. Ahmet is saying, I told you 107 DXY is imminent in one of the previous live streams. I'm still thinking that 107 is imminent. I don't think it's imminent. Imminent's a really, really strong word, right? I think there's a chance, but it has to do these other things first, as I've continued to say from day one, right? I've continued to say this, right? That upper end on that target there, in this target box we're still in, is still what it is, right? Imminent means it's happening regardless. I don't believe that anything's happening regardless. I believe Bitcoin's going to happen higher. I believe that DXY is probably going to turn down before then, but that doesn't mean that it's imminent, that any of that's imminent. It means that that's what the charts are looking like at the moment, right? I think a lot of times you guys get caught up in your words. You try, these very emotional, very, definitive words, right? And you don't understand what that's doing to you and other people that listen to you, right? The charts are going to do whatever they're going to do. Nothing is guaranteed other than you're going to lose money at some point as a trader. And the newer you are, the more money and the more often you're going to lose it, right? So, I mean, that's the realities of trading, right? Let me see here. Let me see here. Eriquin's, what are you saying here, Eriquin, about the U.S. dollar? You're saying true collapse of the U.S. dollar is 15 plus years away, isn't likely to just go away, but rather replaced by digital global government-regulated currency, probably mid to late 2030s. I think that's probably one of the better takes. I think there's a lot more truth probably behind that than what most people are saying online. We'll see how things continue to play out. But again, it's as entrenched as the rest of the world is in the USD and US debt. It's going to take a while to get that to a level that's enough to where to where the U.S. dollar can kind of lose that global reserve currency status. But we'll see what happens, right? But I think that's probably a better, closer idea of what is more likely to happen than not, than what we hear most people online talking about. Guys, listen, if you are just now really getting interested in things like markets and currencies and stuff like that the last couple of years, you're going to get caught up in a lot of this doomsday stuff, okay? And this is the same stuff. I know it's hard to understand, but it's the same stuff that happens every 10, 15 years or so, okay? It is. You can look historically, it happens every 10, 15 years. And it sounds really convincing, and it sounds, like this is really going to happen. I've been through it myself. But again, what you notice, if you've been in the markets for decades, you see this continue to happen, right? Everybody's been romanticizing the death of the dollar since the Bretton Woods Agreement. Guys, that was over 40 years ago, 50 years ago? Everybody's been romanticizing the death of the dollar for 50 years, guys. It's not dead. It's still the preferred place. And, you can have these things where things happen locally in time, where maybe like, oh, okay, well, right now, maybe it's not as preferred as it was. But if you look historically, the dollar is the preferred place to be. And there's a reason for that. And this has nothing to do with me being American. It just has to do with the reality of the situation. But what I'm trying to point out as I do with trading is the realities of what you're looking at. And the fact that what we're seeing right now with this whole, oh my God, the sky is falling, the dollar sky is falling, right? D-dollars, blah, blah, I can't even say it. de-dollarization, stuff like that, is just the same thing that's been repeated every 10, 15 years. And it'll go to the wayside. And then you'll kind of forget about it. But hopefully you'll be listening enough here that you'll still be interested in the market, to still be in them in another 10, 15 years when that happens, right? So that it happens again, you go, oh, wait, this happened last time. Same thing. Here it goes again, right? Yeah, so kind of crazy, right? Am I still counting Bitcoin as a 1212? I sure am. Yep. Let me see here. Real quick here, guys. Real quick. So since NVIDIA has been rallying, right? Which we all know that went above my target, right? Let me see here. Remember, I was looking for that target right up here, around that almost 300 area, and then we had that big bump up, and then kind of even today went up higher. What we got up there around 419 today, and so let me see here. I think we might still even have a little bit further up there, but nonetheless, everybody's kind of really interested in the NVIDIA play, right? I think some other ones to kind of watch, guys, is we've got TSM, okay? Taiwan Semiconductor, right? Now we can see again, they have all this volume coming in on the breakout above this resistance, right? So if you want a chip play, I think TSM is one to watch. I think ASML is another one to watch. Again, same idea. All of these guys, same idea, right? Above these resistances here, popping out, right? And I think MU, again, same idea. Still something to watch as well. Matter of fact, MU Micron here, I've got a target of around $86 based on the height of this barrier triangle. We did break out impulsively above the weekly pivot here. Large candle spread, large spike of volume, and then follow through the next day. So, if we're pulling back, the expectation would be for the pivot to hold, but we should continue higher, at least to that 86 area, and then probably continuing to break out higher above that 98, I think. Okay. Let me see here. Fiboswani says, let me see here. Oops. Fiboswani says, Blockbuster said streaming would not happen, and Kodak said digital pictures would not happen. De-dollarization could happen quicker. What our minds think that cannot happen right now. Again, I think the fact, and to make sure, Fibo's saying he's saying it, not that he's saying it will happen, but that it could. Again, my thought is based on how much of the world is indebted in dollars, you've got to get that down. As long as that remains the, because the second greatest debt is, really, really far behind that, right? It's what, China? I think it's China. Something like 20% or something. So, I mean, there's got to be a significant drop off in dollar debt, I think, before we even really consider that there's really much of a chance before de-dollarization happens. There's a lot of countries talking about it now, but here's what's going to happen. They're not going to sit there. If they join BRICS, right? And they go to BRICS and their economies just continue dying off, right? They're not going to stick around with BRICS. Yeah, they're going to try it right now because it seems hip and cool, and maybe it'll happen. But if it doesn't, they're going to be right back to the dollar. And those that are even in BRICS aren't even giving up the dollar fully. All right? What happens to BRICS if Russia loses Ukraine, right? Loses Ukraine battle, and what happens if Putin is taken out? If he dies, right? I mean, we already got all these things about his health, right? What kind of direction does Russia take at that point? Because I'll tell you what, the U.S. and other Western countries are going to try and help make sure a much more moderate president is put in Russia, somebody that'll work with them. If they're working with them, all of a sudden, what happens? Now the BRICS is basically China. China doesn't have anybody really big jumping in with them there. They can help them kind of buoy it up, give it strength, right? There's a lot going on there, guys. I think we got to pay attention with it, right? Yeah, but again, how much of the world use film? But again, and as you say there, I know it's not that it's not apples to apples, but something to think about. I don't really think it's something to think about because, again, it's not apples to apples, right? You didn't have to use film, right? You used film because it was what, right? But there wasn't anything else giving it use, right? So, again, the dollar has utility, a requirement, right? If you're paying U.S. taxes or if you're paying U.S. debt, you have to pay in U.S. dollars. There is a definitiveness to it, right? It has to be used. You only had to use film until there was something else. You may want to use something else other than dollars, but you can't use anything else other than dollars to pay your U.S. debt or to pay your U.S. taxes, right? And that's just one part of the overall global reserve currency thing. But yeah, I don't think it's a close enough kind of, yeah. I mean, the idea, seems to make sense, right? But I think because of the actual requirement of USD and how far spread, how many people have to use it for those things, I don't think that it really compares quite the same way. But who knows? Maybe I'm wrong, guys. Maybe I'm wrong. But again, I use this as my overlying understanding of what's going on in the global macro landscape, right? In currencies, in nation debt, stuff like that, and so far it's continued to work out extremely well for me. So until it doesn't anymore, me personally, I'm going to keep using that thing that works, right? But always with strong risk management. I don't sit here and say, okay, what I'm saying definitely is all that there is to it, and that's how it has to be, and there's no other way. I definitely don't say that because, like with trading, there's no guarantees, right? But my understanding and my education and my experience, or whatever, that's kind of where I'm at with it. Yeah, it's a very complex subject for sure, guys, right? And I think that's one of the things that a lot of people that come in and they want to be traders and they get on social media and they talk a lot of whatever with these complex subjects. They don't accept that the subjects are very complex. They think it's as simple as A, B, and it's not. There is a lot more potentially into it, in a lot different ways that these variables could play out to produce different endings, right? And so I think as long as you kind of keep that open in your mind, it makes life a bit more bearable. It makes your trading, your investing a lot more profitable because instead of trying to force whether it's the macro concept or it's the chart or whatever into what you think has to happen, you're aware enough that you could be wrong, and so that forces you to use proper risk management, or hopefully it does, right? So let me see here. So that's that right there. So those are the chip plays I'd be looking at right now as well. Real quick here, let's look at the Great British Pound against the USD. You can see we were rejected at previous resistance up here right around the R1 pivot on the daily. Pulled back to the S1 pivot, daily 38.2 retracement, previous area of resistance support here. Getting the rally up. We need to see an impulsive breakout above the daily pivot. Now, again, that's going to change here. Probably just a little bit. Probably come down a little bit lower. Maybe down here around 124.5, 1.245, maybe right around there. But an impulsive breakout above that will give us a target at the swing high, around 1.267. And if we can break out above that, well, then things start looking much more interesting for higher. Minimally, maybe look up here, 1.2908 maybe, right around that area. Low volume node. Could carry up a bit higher into 1.3048. Kind of gets that high volume node. But yeah, I mean, if we can do that, next target after all that is this descending channel resistance. Probably right up here about 1.359 area, depending on how long it takes to get there. So that's what I would kind of watch here. If we do happen to break down lower, though, let me see here. I think I'm probably looking around the 618 here, right around 1.2138, 385, right around that area. Would be that next target I'd look for downside if we break down below the swing low there. Kind of get us right in there into that low volume node between this high volume node and this other high volume node here. So, yeah. Let me see here. Somebody's asking about XRP. XRP still doing good. I like it. From where we're at here, I think we've probably got like 5 up, and then A, B, 1, 2, 3, 4, 5. So I think we've got like a 1, 2, and then maybe a 1, 2, 3, 4, getting a 5 here, right? Let me see here. Yeah, so if I'm looking at that, let me see here. Yeah, you can get like a ABC is 1, 2, ABC is 3, 4, ABC is 5. Yeah, so we can look like a 1, 2 here. And if that's the case, this is the 1, 2 here. I'd be looking at a 3 around 74 cents minimum. 5 is minimum 84.5 cents. But then locally here, it looks like we've got a 1, 2, 3, 4, maybe a 5 going on. So at least locally, I'd have a target probably right around 69 cents or so. Get you right prior to that R1 pivot. Let me see here. If we can get right about there. We want to wave 2 pulls back. Maybe get you even up to the yeah, see, a little bit higher will get you that wave 3 we're looking at there at 74 cents. So I think we might even get that push up, that overextension into 74 at the R1 pivot here on the weekly. But yeah, we get up there. If we can make that minimum wave 5 right around 84.5 cents, you can see that gives us a 50% pullback to around 56.6 cents, which keeps it above the weekly pivot, right up into this resistance support area. And so that would be a perfect wave 2 target, and then continue on from there higher. Again, I think we continue going higher. If we look at this, as leading diagonal, even here, say like a 1, 2, 3, 4, we'll get a 5 here. Let me see this real quick here. That's 3. Yeah, we're well above 1. So, I mean, this would be like a 1, 2, 3, 4, 5, right? And then 1, 2, 3, 4, 5, right? So if these are it would be a leading diagonal because they'd be waves of 5, right? Wave 1 would be 5 waves, wave 3 would be 5 waves, and wave 5 would be 5 waves. And so that couldn't be an ending diagonal. It would have to be a leading diagonal, which means it's wave 1 of 5 heading up if it was, right? So again, if we're looking at that, that would get us ultimately, we'd probably be looking up here around, it's $3, right? So $3 would give us that wave 1. So I'm not saying that's definitely what has to happen, but right now that's what I'm kind of looking at. And then, of course, we'll have a pullback, and then we'll have, 3, 4, and 5 to finish out. But if you have to think about things macro-wise, right? What gives what would give things like XRP or Bitcoin these strong rallies higher? What would give them, right? And so that's what you'd have to kind of look at with that. Okay. But right now, those are my kind of local and then more drawn out targets as we kind of look at this. Anything can change as it plays out, and we'll see. But man, oh man, I think it's probably what we're looking at there, right? Let me see here. What else are you guys looking for? I've got a Litecoin chart here. Again, Litecoin USD on the weekly, watching this box here, this rectangle kind of thing, this range, right? Looks like good reaccumulation right now with the volume and the price action and volume here. So looking for a breakout higher above this kind of, the swing high is up at 105.72 cents. We'll look immediately at the 129.44 target. But again, I think that kind of sets it up, this rally higher, A, B, C. So we really need a breakout above 295 and 40 cents. If we can do that, that should then signal that that this pullback is complete and we're heading up to a new high, which will give us a new kind of all-time high here. I've said before, I think 400 is an easy target overall for this, and so we'll continue to see if that plays out like that, okay? We did get the bullish cross, which I signaled everybody on Twitter down here on the weekly. Bullish cross I was looking for right down there around oversold. And, again, look at this range, looking for that breakout. Let me see here. Litecoin against Bitcoin here. Looking kind of interesting. Again, another range. Looks like a good accumulation range here as well. So you get your selling climax, automatic rally, secondary test. You get your spring down here in phase C. Phase D is this interior markup, and then get ready to potentially do an exterior markup. You can see that we're crossing bullishly down here and oversold. We're about to. Again, this is the daily chart here. So we look for that move up. This pullback has been right there between 38.2 and 50%, almost 50%. So we can look at that as a 1-2. So that would give us then minimum expected wave 3 up here at 0.0044 basically. Minimum expected wave 5 up here at 0.00468, which as you can see would give us 5 waves up. The first subwave of the next wave up right here around where the previous resistance was, which is what we look for. So I think we've got some good potential movement on that setting up as well. Let's see here. What else do we got? We looked at the VIX last week here real quick, guys. Kind of put that back up there. And as you can see, we just got this rally up to about 20, pulled right back down to that 16 level, rallied back up to almost 20 again. We're pulling back right here to this support area right around 17 and some change. As we kind of, the VIX here continues, the CME here continues to, I got to get this done right. Nope. Sorry, hitting the wrong buttons here. Yeah, this is the E-minis here, guys. And so again, looking at this, what I was talking about earlier, this resistance, right? Trying to get it with this mid-August swing high. So breaking out through that should have the VIX dropping lower. Again, under 16 generally coincides with continued rally. So that's what we're going to look for there, okay? Let's see here, Google. Google may be done here, 5 waves up. Google has broken out above the mid-August swing high. Again, all these charts at mid-August swing high is what's interesting. And so this looks like we've got an A, a B, and a C here, or a W, X, a Y, however you want to count that. And then a leading diagonal here. If we're done, we're looking for a breakdown through this ascending purple kind of support area. So if we can get down through, well, we'll say the swing low here at $20.75. That opens up a move down here toward this weekly pivot right there around about $108. If we do that from here, by the way, you notice it hit this supply structure up here. But that'll give us, almost a 50% retracement, the high volume node area, 105.5. So kind of that area is where we'd look if we can get a rejection here and come on down. If we're going to continue up higher, based on the height here, I'd be looking up here around $30.80 or so, right up in the upper end of this supply cluster here, which puts us right up into almost the weekly R1 pivot. So again, would definitely be what we're looking at. So, if we break out higher, that's where I think we're going. If we break down lower here, then again, looking for that pullback there. Let's let me see here. I'm not sure what all you guys were asking about. I got to get ready to go here in a minute. So this, you guys, if you've been watching me, you know, since back here in December, January, we were looking for a breakout of this resistance for the Qs here. We got that large candle spread, large spike of volume, and then followed by another one here, breakout, hit the pivot, pulled back to support, broke out through that pivot. It's popped out above my target here. We could potentially pull back into this blue here, and then we look for maybe one more rally up just above this R1 pivot to maybe finish that out. Let's see. Right up here into these kind of these wicks here, all this support resistance area. And so that basically give us about a 50% retracement back down toward this area. So yeah, if we break out higher, we're looking right above that R1 pivot. Look for a pullback here. And in that case, you know, get us the 1, 2, 3, 4, 5. But if it does continue to, if that's it, we're still looking for the target down here. If it continues to just drop down through here, we're still looking at that weekly pivot. If we go out, like I said, if we go to the upside, I think we get just beyond the R1 pivot there. We kind of find that resistance that we've got in this area. Let's see, maybe here. Potentially up there around 368 or so, 365. And that kind of gets us this area right above the R1. So if we do break out higher, I think we get rejected there. We come back to weekly pivot. Otherwise, if we continue here, we'll just continue on down that weekly pivot. Either case, if I'm looking to go long, it's right down in this range down here. Weekly pivot area, right? So 307 to 315 kind of area is where I'd be looking to go long on that next move up. And that next move up, you know, it's probably going to get us up here. We can just do the short target. We'll do the short target here if we've already hit it there. Maybe up there, 471. If it goes up higher here, obviously it'll go higher, at least around 493, 494 kind of area. Does that make sense, guys? So yeah. Let me see here. But I think, you know, again, I think, you know, people have continued to argue why these can't go up, and they've continued to miss all this money on the way up, whether it's with tech stocks, whether it's with chips, whether it's with, you know, Bitcoin and other cryptocurrencies. I think the dollar is probably more likely closer to a top than not, but we'll see how that continues to play up. But it doesn't mean things can't continue to rally, even if it is, right? Especially if overall, if it's getting to a top and it's going to reverse and head down lower, you know, make a new lower low. You know, we would expect things start to become, you know, as you get into the end of that dollar and rally against the contrarian rally, right, against the trend. As you get toward the end of that, you would expect money to continue flowing into the, you know, other things that are denominated in dollars, right? Because that way, you know, you're preparing for that. It's kind of like when Bitcoin's nearing the end of a rally, how money rotates into large caps and then the mid caps and small caps and micros and whatever that way. Same idea with the dollar generally. It's not a perfect, it's not 100%, but generally, if the dollar is an anti-trend rally, right, a contrarian trend rally, a counter trend rally, there we go, that's the word I'm looking for, then as it gets toward the end of that, you should expect to see that other things that are denominated in dollars, assets, would continue to rise with that, okay? So, but overall, I mean, I think, you know, I kind of think that's where we're heading with these things. So that's where we're at. We'll be back on Friday, guys. Don't forget, Fibaswani will be with us, so he should be able to say something this time around. As always, you can join us there at TexasWest.capital. You can jump on the monthly, and the discounts are already in there for right now, guys. Got another day on this. So get on it while you can. But you can get your monthly, month-to-month for $50 a month, save $149 each month for up to 3 months. Or you can get the big deal, which is get a year to change your life, guys, to change your trading for just $549 rather than $1,500 and some change. And you won't regret that. All right? You guys have an amazing week, as always. Man, you know, at the end of the day, just remember, the only thing you control is how much you lose. So risk management day in and day out is the most important thing you're ever going to do as a trader. If there's anything you take from these streams, at least let that be it. Because that'll give you a fighting chance. If you take that seriously and you consciously continue to put that effort into that, it's going to give you a chance. If you don't, you have little to no chance of making any money as a trader, okay? Other than that, the other biggest piece of advice, general advice I can give you guys is don't enter a trade just because, all right? Enter a trade because there's a higher confidence entry, because there's a higher confidence chance, a more likelihood that it's actually going to play out. And that's usually a confluence of factors, not just one, okay? All right, guys. I hope you guys have a great week. Take care. And if you guys are over there in Discord, I'll see you guys there in just a little bit later. By the way, guys, don't forget to like, follow, subscribe, comment, all that great stuff. All right. Y'all take care. You have just have a great week, guys. I mean, I can't say this enough. Everybody's so stressed out about everything that's going on. Try and take a break. Just understand it'll all get taken care of one way or another, okay? And worry about the things that you control. Everything else, it's not worth it, okay? Take care.